What's going on, everybody? It is January 16th, 2025, daily episode over at NQ and the live stream review. So, looking at price action today and what unfolded, basically it was a reaction off of the daily time frame, premium bearish order block that we've been paying attention to. I have a lot to discuss, so I'm going to try to formulate this the best that I can. But I do want to start off with this morning with the AM session. We had a bit of a tight range, ended up taking a win, and then two losses after that. So it's one of those situations where trading is such a mind illusion game, and there's a lot of rules that you have to create yourself, and this is all where trading becomes personalized. And what I mean by that is, for me, 3 trades is really the maximum that I'm willing to go in a session, because if I go beyond that, then I know I'm more likely to tilt. I know I'm more likely to be engaging with price action that I normally wouldn't. My rules, the models, the criteria for setups, I probably won't follow it. And how do I know this? Well, I've gone through multiple years of going through a lot of tilting, a lot of fear missing out, a lot of stupid decisions, and these are the rules that I've basically have came up with myself, and I'm sure this is common along a lot of people within the industry, but there's going to be sessions like this where you take those losses and you have to sit with that. And in the aftermath, what we've seen today in the PM session during lunch, you see this huge rollout in price. And it makes you wonder, well, I took those losses in the morning. What happens if I just came back to the charts and I was able to go back into it? For me personally, I have to sit out of price. Even if price moves like this after the math. Everything that I was looking for moved to basically almost perfection, just in the later portions of the AM, or in later portions of the day. And the AM session was very consolidated, very choppy. So it leaves you in this kind of situation where you say, well, what happens if I just went back into the market? What happens if I just kept trading? I could have probably made my money back, could have, followed along with my model and everything that played out. Yes, but then there's going to be the flip coin where if you try that on a day where price action isn't so nice and it doesn't play out the way it did today in the aftermath of the afternoon, then you're left in this state of where now you're going on to 4 trades, then 5 trades, then 6, then 7, then 8, and you're trading in conditions where it's very unfavorable. So I have a certain daily loss limit for a reason, because I know if I go beyond that, there is no stopping until either I get my money back or I blow the account. So I'm sure that's very common with a lot of you, where if you lose a certain amount of money, and if you don't stop at that particular moment in time and you just choke on that loss for that day, then there's no ends to it. You will either blow your entire account chasing back that loss, or you're going to make your money back and be happy, right? Happy. So you have to understand that, yes, it may be unfortunate, it may be unfair, it may suck that you took the losses in the AM session if you did the same as me, and then you had to sit out the rest of the day and watch price basically play out perfectly. Is that unfair? Yes. But on the flip side of it, you're also helping yourself, because on another day, if you went back into the market in terms of variables and probabilities, that's all this game is variables and probabilities. In terms of variables, if you look at variables and the different situations that can happen, if I was to try to do that on a day where shitty price action, I allowed myself just to have unlimited amount of trades, unlimited amount of capital just to spend until I whatever made my money that I was satisfied with, more than likely, based off of experience, because I've done it, I will end up blowing the account if it's a shitty environment. So we could sit here and play the game of, well, if you placed me in this environment where I didn't take those losses in the AM session, I would have operated probably pretty well, which I'll go over. I probably would have operated very well in the afternoon because it was very easier price action and it played out to what I was looking at. So it's just one of those things where, yes, if you're not used to it, trading is very unfair. And you have to get used to it, because the house doesn't play doesn't play nice. The house meaning, if you're thinking of casino, that's the casino is the house. The market makers, whoever they are, algorithm, it doesn't play nice. It's not an even playing ground. So The way that you get back at the house, you get back at the market makers, is you place the things that you have control in your favor, and you really emphasize that as your strength. So when we look at variables, right? If I take my max loss for the day and I'm done, that's it, and I move on, well, guess what? That leaves me to have a clean slate moving into another day where the entire environment, entire trading atmosphere, those variables have completely now switched again. So now I'm placing myself in a better position. It's very much, if you study gambling, and I hate that people don't like to compare this to gambling, and even in this community with these concepts, people don't like to. But I love the comparison of gambling and trading together, because if you look at actual professional, really the closest you can get is poker. They emphasize a lot of variables and probabilities. They place a lot of emphasis on that rather than their strategy, or rather than on themselves. And I think that's where a lot of traders, even myself, is they mess up emotionally because they get so frustrated at themselves, and they stop looking at variables. They stop looking at probabilities. If you put all your emphasis on probabilities and variables, and you do your absolute best to execute the model, that's the only thing you have really control over, plus your risk management. If you do that, and you let everything else take care of itself, you will end up profitable. Where we screw things up is when we start to try to tinker with that variables and the probabilities, and we try to throw it, we try to push it in our favor. We try to have control over that. You don't have control over variables or probabilities. You do not have control over that. It's completely random. Of course, the amount of knowledge and skill set, people are going to, argue with me as far as, well, if you had a better skill set, then you're going to win more. Well, yes, but based off of where I'm at currently and my trading knowledge of ICT and 7 years of doing this, I know I can win a certain amount and I can lose a certain amount. I end up winning more than I end up losing most of the time, but there's times where I'm not winning more than I lose. So I have to trust variables and probabilities and trust risk management to take care of the rest. Otherwise, if I try to control it, then it's going to go all out the window. So I know I'm going on a rant, but these things, are things that I think about constantly after the math of days like this, where, I sit there and I ponder and I think, well, what are other people thinking to themselves, and what am I thinking? And how do I have control over that? How do I kind of get the upper hand? To me, the person who's trying to get the upper hand, like I used to, is trying to overtrade in a condition like this, or they think that they're successful by taking their losses in the morning session when they should have stopped, and then they end up profitable in the afternoon. If I, again, and when you compare over a long period of time, if I try to take a max daily loss, right, the most I was willing to absorb in a morning session, whatever it may be, and then try to trade again and end up profitable, I would like to compare or take the statistic of how many times I would actually end up profitable. I would beg to differ. I would end up losing more or blowing my account more times than I would end up profitable trying to trade in an afternoon session or whatever it may be after I met that max daily loss. So hopefully it makes sense. Maybe some of you it's just a ramble, but again, it's something that keeps me calm, because I know that environments like this can frustrate some people, and they can frustrate myself at times. And again, that's where we have to talk to ourselves and journal. And for me, that's why I like doing day logs. That's why I like doing live streams, because it's very much like a journaling process, therapeutic to me, because I can talk about the things that I'm thinking about and get it out there. If you're just kind of bottling it all up, you're not putting it anywhere, well, you're eventually going to take it out on the charts. That's where it's eventually going to end up. So I'll put a disclaimer. I don't know what market this is of the recording. It looks about 8 minutes of me talking, but from here on out, it'll just be technicals. And there's a lot to talk about technically too, so I'll try my best to wrap it up. Again, from the daily time frame, the dealing range high to low here, we've been talking about this, how we ran up inside of this premium bearish order block here. We talked about last night, even this morning, this weekly time frame inversion fair value gap. We got up into it, and now we're seeing the reaction away from it. The narrative in the bias all week has been short, and since we got up into this, that's where we went all hands on. I'm looking for shorts only. So overall, looking at that bias, you can still short-term scalp short or longs, and I'll show you that. But as far as the overall narrative, you're looking for shorts. We got up beautifully into this. We talked about this last night. Look at this here, this inversion. Go back to last night's day log. This was literally marked out to a T. This inversion fair value gap and the sell side imbalance. I said if you want an exact area as to where you should be expecting price to basically reverse, then you should be looking at that area, because that's inside of a premium. beautifully met the optimal trade entry, sell side imbalance with the inversion. We're seeing this collapse lower, and now we're running into this daily time frame buy side imbalance, which is here, or 4-hour buy side imbalance here. So we're dropping down into that, which is what? A discount. So you have two opposing dealing ranges. You have from this dealing range low to up that high, that's your bullish dealing range. You're dropping down into this discount. From this dealing range high to low, that's your bearish dealing range. This is the parent because we are in a bearish environment. But this is the retracement dealing range, right? There's always multiple dealing ranges that you're dealing with, so you have to understand where you're at. So we're dropping down into this retracement legs discount, and that could, again, it could give relief for maybe a short-term bounce out of here. If price wanted to completely outright reverse this bearish dealing range, then it would be utilizing this to send it higher. I don't believe that's true. I believe we will trade through this buy side imbalance and we'll trade down on the sell side down here and eventually take out the dealing range low that we formed from last Friday. So look at the hourly time frame. We're going to do the same thing. The sell side imbalance, which is here on the hourly chart, we never met it. Now you may ask, well, why was that never met, CJ? Because of the parent time frames. Look at your daily time frame. Look at your 4-hour. The daily time frame bearish order block was met. The 4-hour bearish sell side imbalance and inversion was met. So the hourly can be left open since it's higher than both of those, right? That's the reason for breakaway gaps and lower time frames. You're going to see higher time frame PD rays be met, lower time frames will not because it's already working away from the parent. The child does not need to be met. Same thing here on the hourly chart. This is your discounted buy side imbalance that we basically dropped down into during the later portions of today. Go down to a 15-minute chart, so we're going to start seeing a little bit more clarity here. You can drop the, there's a few things in here that I want to get rid of. This is your new day opening gap. This is a previous new week opening gap, and same with this one. That's the current new week opening gap down here. So this is what we were working with in the AM session, and I was pointing out to all of you that I wanted to see, and I'm going to have to reel this all back to at least give a perspective of this morning. At first, we were aiming towards the sell side liquidity, which is underneath this low. Once that was achieved, price retraced back up. You can't see it because it was in one singular candle. Price retraced back up into this inefficiency here. Spotting high resistance profile days are sometimes a lot harder than it may seem. There's characteristics behind it, and sometimes price goes into high resistance or consolidation and then snaps out of it and goes into low resistance for the rest of the day. So spotting it before it happens sometimes it's nearly impossible. You can't do that. There's characteristics like a large range day, major news event drivers, whatever it may be, but sometimes you just get caught. You can't see it before it unfolds. ICT's talked about this in depth. So in the real moment of time, without looking in hindsight and saying to myself, well, I should have seen this and I could have done this and that. In the real moment of time, what I was thinking, which is a huge emphasis for all of you, is to always pay attention to what you're thinking about in the real moment of time. Never to look at hindsight and say, well, I should have done this, this, and this. Of course, you make adjustments, but you don't know that until the day's done. If you drop down into a 5-minute time frame, let's go over the first trade. I don't want to get too confused in here because there's a whole lot today, so I don't want to drag out this video. It's already 13 minutes long. I may just cover the AM session. You guys can do the PM session as homework. Looking at today, this London session low was the target. Why? Again, the bias in the narrative from the higher time frame was already derived going into today's session. The daily time frame was in a premium. It was inside of the daily time frame bearish order block. The 4-hour time frame, same thing. And as we were coming into New York session, the open, we were already seeing movements lower. Before the open, we had a news event driver, which didn't do a whole lot. And all it was doing was pushing price back up into, right at the open, the sell side imbalance, which was inside of a premium. So looking at away from, if I guarantee if I drag this lower, it may make more sense. This red box would be your daily time frame or the 4-hour time frame sell side imbalance. So it's working away from that parent time frame bearish PD array, which is also inside of a premium. That's to note. So what you're looking at a 1-minute time frame structure is once it meets that PD array, the red box, and I'll take this away, it displaces lower, comes back up inside of a premium, sells off again. From this dealing range high down to this low, price does what? Works right back up inside of a premium. And you could go out to higher time frames, like a 5-minute time frame, 15-minute time frame, to see the inefficiencies and the things that it's working away from. Again, you're working from this dealing range high down to this low here. Since we made a new low underneath this low here, price works back up inside of a premium right off the open, drops it. Now we have this formation, which is your bearish breaker. All of these down close candles are your bearish breaker. For your homework, you can go out to a 5-minute time frame and study it. Price retraces up into what? Another premium. From this dealing range low, from that high to that low. Is this low underneath this low here? Yes. So that's your new dealing range low. Price retraces back up into that dealing range premium and inside of what? A bearish breaker. Now, on a 1-minute time frame, price doesn't give you any inefficiencies to work with, right? But if you go into a 15-second chart here, go inside of that 15-second chart, and I'll have to put the bearish breaker on just so people can see it. If you go inside of the 15-second chart, I'll show you where you could have entered. And now this is where, even for me, knowing these things and knowing these concepts and going back in hindsight and trying to say, well, trying to be like an all-star, it's all comes down to time and experience in real live market, in real time in the market. There's decision making that you're going to make in real time versus in hindsight. I didn't enter into this in real time because I didn't know what the true real move was. I felt confident to start entering into shorts when we were down here. At that real moment in time, I was looking at a few other things that may have protected me, I guess, from wanting to be inside of the market. Also, the time. You can't look at your rules and say, well, I want to change my rules just because of one day, right? My rules are really, I'm waiting for the macro. That's for the most part, like 90% of the time, I want to be waiting for the macro because a lot of mistakes happen before that. That first 20-minute window, I've made a whole bunch of mistakes going into that macro where I would rather just wait for it, right? So from this dealing range high to low, we work inside of this premium. And inside of that bearish breaker on a 15-second chart, you also have this reclaimed inefficiency there, which, if I'm not mistaken, I was going to say that's the first presented 15-second. That's a study for some of you. We work inside of that, you see this displacement away from that premium. Inefficiency forms here. What is that? That's an IOFED, right? Since it's already coming away from and dropping away from a premium, then we should see fast displacements. So we see this inefficiency here on the 15-second time frame, IOFEDs it, drops off lower, takes out sell side liquidity. Another inefficiency forms here. And real moment of time, I was really debating on shorting at this moment of time. I was just unsure if the 1-minute time frame in here, when we closed, I honestly wanted to see this inefficiency be traded to. And now I was going to enter in short there. So this inefficiency that's resting right there, I wanted to see this next candle open, trade up into it, and I would have shorted it. I ultimately did end up shorting it. And I'm going to have to turn on the previous, well, you're not going to see the new day opening gap, but the new day opening gap was resting right in here. Overall, the drawn liquidity was this sell side liquidity pool here, which is what? London session low. So I could see in the real moment of time, this is a hard thing to describe, when I took my short, which was inside of this, which was the new day opening gap, I was getting information, which is to me really just time and experience. It's hard to say technically. That price was not willing to go back inside of a premium. I could see that I was failing to do so. ES was dropping off lower. Excuse me. So at that moment of time, I'm willing to take a short in here to target that sell side liquidity pool. So I took a short, we targeted the sell side, I took a partial off, left at break even. I got stopped at break even on the last one. The reason I did that is because I wanted to see if we could get a really fast run like we did today in the afternoon underneath that low. I was expecting what we did in the afternoon to happen during this AM session. I wanted to see a really quick, fast-paced run. And again, this comes down to variables, back to the beginning of the video, variables and probabilities. There's going to be days where what I did today was perfect and price just runs and I'm able to execute it perfectly, hold on to the whole thing, even pyramid into it. But then there's days where price wants a little bit more high resistance. It wants to engineer more liquidity. It wants to do the run in the afternoon. With my knowledge and based off experience, do I have enough information to tell me when those days are going to happen? No. That's, again, just the game that we play. And you have to accept that. Is it unfair, unfortunate? Sure. But the flip side of it is, as long as I do the right things, I'll end up profitable. That's the number one final statement that you have to make to yourself. If I do the right things, even though things are unfair at times, I will still end up profitable. So what does it really matter? Do I have to be perfect? Do I have to trade every single range and know every single thing that's going to happen within this market? No. As long as I end up profitable, I don't even care. I don't care to be perfect. I don't have to know every single day what's going to happen, if it's going to trade nicely in the afternoon or in the AM session, or it's going to consolidate. Of course, it would be nice to know these things, but I think you come to a certain extent in knowledge that I don't know these things, and that to me is a strength compared to a weakness, where some people say, well, I know that it's going to trade more. You don't know shit. There's a limited amount of knowledge that ICD has given us that I can't know beyond that, unless he gave me more information, that I don't know that these type of things are going to happen. I don't know that price is going to go inside of a consolidation. I didn't know that. I took my chance based off of a model and variables and probabilities, and I took the chance. I can't get upset or say I wish I knew more information. There's just a limited cap on information that we know. So you just have to play the probabilities and variables. And to me, again, that's a strength. It's not a weakness. It just accepts the reality of what it is and moves on with it. Rather than me getting pissed off and upset and wanting to know everything, I've tried to do that. That's why I speak like this, because I've tried to be that person where I tried to know every single day, every single environment, why price did this and that. At some point, I just said, look, as long as I can just maintain profitability, I don't really care. As long as, if things are unfair and I take losses and, shitty things, unlucky things happen to me in the market, it is what it is. As long as the end of the baseline day is I end up consistently profitable, that's cool with me. So, beyond that, price meandered around in here. I was really showcasing high resistance. And high resistance, I wouldn't even say this was high resistance. This was just engineering liquidity. Price could have definitely, on another day, again, variables, it could have taken out this loan here. And I at least would have taken a partial off and probably moved stops to break even. But ultimately, we wanted to engineer more sell side. And price engineered sell side, also engineered buy side. And price wanted a deeper run inside of a premium, which was above this buy side liquidity here. Again, I don't know that this is going to happen. I don't think anybody can tell you that. And I think some people, that may be like a shocking factor for who are learning these concepts, because you've been told so much BS. I can't tell you that price was going to do this before it happened. I was anticipating a run lower. Yes, I was anticipating the run to happen when I entered. That's why I entered into the market. Duh. So to say that I should be able to predict this retracement or this consolidation, it's nearly impossible. So I just say, screw it. It is what it is. I'm going to move on to the next day where I can change the variables and probabilities back into my favor again and try to execute the model that I know and the things that I know perfectly. So again, hopefully you get the theme of what I'm stating here. I mean, it's not, so some people it may be not so pretty because they want to know everything. Trust me, I was one of those people. If you learn to do what I'm doing in here, I think it's going to be a lot easier on you. So everything else, I want you to study the run down into the relative equal lows in here. And last but not least, I'm going to state in here, because again, this is a thought that I had today. This run up higher here. Since I took my max day loss, I took my 3 trades and I met what I was really looking for the day. I could see how this is a premium retracement from this dealing range high. This is our parent dealing range. Price is retracing back up inside of this premium, right? Retrading into that breaker, and then you have the sell off down to the relative equal lows. Since I already met my max day loss, this comes the question that arises in my mind is, well, I definitely could have traded this right side of the curve. I probably could have, most definitely, right? Because it's now kind of moving in low resistance. I have a nice draw on liquidity. It's moving right back to the frame that I was looking at. Why don't I just do that? Why do I have to sit on the sidelines if I know what I'm doing? Well, that goes again. If this was to happen on another day, and I allowed myself just unlimited trades and do whatever I want, I'm going to end up in a day where price does this shit and I end up blowing my account. So I have to have that hardline based rule and say, look, that's it. It's unfair. It sucks. Whatever. I move on to the next day. So I know it's a bit of a ramble today. It's probably jumping all over, but hopefully I'm trying to really drive home that variable and probability factor. I think that if somebody told me that, it would ease my mind a whole lot more. And it would give me a lot more confidence to kind of just not have to know everything or be content with even sitting out of a day after I've taken my max day loss and watching price unfold. It would give me a lot more confidence. Trust me, these days will unfold in a better light where I'll be a part of it. And how do I know that? Through time and experience and sitting through these same things over and over again. I mean, that's the only way I know this. So hope you guys enjoyed today. We'll be back here tomorrow for the last day live stream of the week. Until then, good luck in your trading, buddy. Be safe.